This content is brought to you by TaxBit, which is the leading tax service provider in the crypto industry. TaxBit allows you to easily connect your crypto exchange accounts and pulls the data in and then calculates your crypto gains and losses. And then it provides you with the respective forms that you would need to submit to your accountant. This is a service I've been personally using for years to calculate my taxes around crypto trades, and I will be, of course, using them for this tax season. So if you'd like to learn more about TaxBit, please visit the link in the description. Welcome back to the Thinking Crypto podcast, your home for cryptocurrency news and interviews. With me today is Matt Hougan, who's the Chief Investment Officer at Bitwise Asset Management. Matt, great to have you back on the show.
Oh, I'm so glad to be back. It's been too long.
For sure. And I got lots to talk to you about. Obviously, you've got your ear to the ground on the market, what's happening from a regulatory standpoint. But I'd like to start with what's new with Bitwise. Any updates that you can share with us?
Sure. As usual, Bitwise has been humming along, introducing new funds into the market. We introduced the first ever NFT fund recently, holding a diversified portfolio of NFTs. We're working on a few more items, and we continue to talk to investors on a daily basis. You know, we have a team of 20 people out there talking to financial advisors, bringing them into the crypto ecosystem. That's going better than it ever has before. So more of the same.
Now, tell me more about the NFT index fund. Are there specific types of NFTs like CryptoPunks or whatever it may be that you are putting into the basket?
Yeah, absolutely. So from a starting principle, what we were hearing from investors, what they were excited about the NFT space, but they had two big issues. One, it's slightly intimidating to buy NFTs. You need different wallets, different architecture. They didn't know how to do it. And two, the price points are very high, right? CryptoPunks, Bored Apes, you're talking about a couple $100,000. And if it's a small allocation in your portfolio, you have to be pretty wealthy in order to make a reasonable allocation to NFTs. So we wanted to solve that. So we created the first NFT index fund. And as you suggested, it holds the floor NFTs in the most valuable NFT collections. So that means CryptoPunks, it means Bored Apes, it means Mutant Apes, it means a few more artistic oriented like autoglyphs and fidenzas, mostly PFPs, but some in the artistic space. And it's a diversified portfolio of 10 assets, and you can buy it with a $25,000 minimum. So it makes it easier for people to put NFT exposure into their portfolios without attaching a multi-$100,000 price tag or running into these technological difficulties.
For sure. That is something I personally want to explore because, to your point, some of these NFTs are outside of my range of investment, but I would love to get exposure. And I think a lot of folks, like you said, who are still exploring, still learning, get exposure while you're learning will be awesome.
Yeah, that's exactly right.
I read on a news article that your entire sales team, they passed the Digital Assets Council of Financial Professionals Continuing Education Program. Can you tell us about that?
Absolutely. I mean, look, what our sales team does is go out and talk to people who are not crypto native about what crypto is. These people are financial advisors who typically have 50 to 100, maybe 200 clients. Those are families just out in the ether. They run small businesses. They work at companies. These people think about crypto a few minutes a day, but they have questions. And so our sales team is sort of the point of the spear that talks to them about those questions, to help them understand what's going on. What does Ukraine mean to crypto? What's going on in Ethereum? What is this Solana thing? What are NFTs? Why is someone paying hundreds of thousands of dollars for pictures of an ape, right? People have questions. And so the sales team went through this credentialing process that demonstrates that they all have a strong knowledge about what crypto is, what it isn't, how to talk about it. It was very valuable because while we, talk about these things at Bitwise, and while there's a robust internal discussion, we don't always have time to sort of step back and make sure everyone understands every step of the chain. They understand consensus mechanisms. They understand how different crypto assets differ. And so this was a nice process to put everyone through to make sure that they are experts in their field and can talk about this constructively with people in the field.
Yeah, that absolutely makes sense. I fall into that trap sometimes. I go talk to folks who don't know about crypto, and I sometimes use too much technical jargon, and it's like, what did you just say? So I could absolutely make sense on the sales side to be able to craft that message and customize it to the audience that you're approaching.
Yeah, absolutely. I'd also add, it used to be Bitwise was a relatively small company, right? A couple of years ago, we were 10 people. Everyone was deeply enmeshed in the crypto market, but we're growing quickly. We're now close to 70 people. And as you bring people on, and this is true not just at Bitwise, but as the industry scales, these sorts of foundational educational pieces, foundational credentialing is really important, because the last thing you want is people going out there and saying things that aren't accurate or partially informed. So this is an example of the scaling that Bitwise is going through, which I think is something you're seeing throughout the crypto industry right now. We're really entering a much broader space, a much bigger ecosystem, many more crypto jobs. You're going to see this kind of credentialing, I think, become more and more important and even necessary.
Now, of course, with the additional index funds that you've added to your portfolio or services, your assets under management have, of course, increased. I think last I read it was at 1.3 billion. Is that the correct number to date?
Yeah, I think it's probably a little bit north of that now, but that's in the ballpark. 1.3, 1.4, 1.5. Yeah.
Awesome.
Yeah.
So let's talk about Ukraine. The world is in a weird spot right now. Obviously, our thoughts and prayers are with the folks in Ukraine. But in this situation, and I've been talking a lot about it, the undertone seems to be crypto. Not to make light, once again, of the situation that people are going through, but there's sanctions. There's move towards crypto by both Ukrainians and Russians, the Ukraine government's accepting crypto donations. Now, Bitcoin is seeming to move up in value in the face of uncertainty. What are your thoughts on this entire situation as it relates to crypto?
Yeah, as you mentioned, primarily the thoughts are the people of Ukraine fighting in the streets for their freedom. But it is interesting that this is really the first global conflict where at least the global alliance is fighting it primarily from a financial lens, right? We've seen a massive weaponization of the financial infrastructure, whether that's sanctions or SWIFT. And it's also the first sort of global conflict where crypto was big enough, at scale enough, that it had a seat in the national security discussions and is playing a role directly in the conflict, whether that's allowing people to donate to Ukraine, allowing citizens access to their money, or being involved in the sanctions ecosystem. So it's a really important moment for crypto. I have a lot of thoughts on it. Let's see where to start. The first one I would say, it's incredible that crypto networks continue to prove that they work so well during times of crisis. You see lines at ATMs, you see concerns about people running out of cash, but you also see dramatic increases in crypto trading volumes. You see stories of reporters forced to buy cars with Bitcoin because point of sale transactions didn't work. It's a reminder during times of crisis, financial architecture could work much better than it does in the world. Crypto is working just fine in these markets, and the traditional financial ecosystem is breaking. And I think that's an important point. The second point, obviously, is with the weaponization of the core financial infrastructure, with imposing sanctions with like SWIFT, which I, of course, support. You are seeing the world start to think about the need for a apolitical, non-polar, and neutral financial architecture. There are good elements to that and bad elements to that. But one sort of impact of crossing the Rubicon of weaponizing SWIFT as a tool for international geopolitical sort of pressure is you're going to see the desire for an apolitical rail increase. So it's this really incredible moment. You know, if you think about the COVID pandemic, it feels like that was an incredible moment for crypto. It sort of up leveled in a significant way as we moved from a primarily physical world to one that was increasing digital. This is another moment like that where we're seeing a step function increase in the world's recognition of how important crypto is and what it could mean for the future, and the likelihood that we're going to transition to a neutral, apolitical financial ecosystem in the future. I think it's hard to overstate the importance of these weeks in terms of the future of crypto.
Yeah, I mean, it seems like we're at a tipping point, and crypto is going to a new level. Despite the situation we're in, it's amazing to watch it unfold. And on that note, we have in the United States potentially crypto executive order coming from President Biden. We're also seeing more members of Congress becoming pro-crypto. There's bills coming from different states trying to make Bitcoin a legal tender. What are your thoughts on the potential crypto executive order? Some folks are saying this may not be bad. It's actually going to be good, maybe to rally the troops, bring all the different regulators and divisions of the government to start working on constructive frameworks.
So broadly, I want to talk about it broadly, and then I actually want to talk about it in light of what's happening in Ukraine. Broadly, it's going to be strictly good. It's going to be strictly good for really two reasons. One, the market hates uncertainty. So prior to Ukraine, I think one of the reasons we were trending down this year was the market was sitting in fear of this executive order. It's often the case that the lack of news is worse than the news itself, however that news entails. And so I was looking at the release of this executive order as sort of a milestone that might mark the start of a recovery in the crypto markets. Maybe it would take a little bit longer for us to work through tax selling, but I thought this would be a line in the sand. Once we got the news behind us, we would move forward. So strictly good from that perspective. I also do think that regulatory progress is the thing that will unlock the next major bull market in crypto. There are still large chunks of the institutional infrastructure that are afraid to move into crypto because there is a lack of regulatory clarity. And what we were expecting from the executive order is sort of a directive to different regulatory agencies to get their stuff together on crypto, to figure out what the US regulatory policy was. And so I thought regulatory clarity almost in any scenario would unlock a next major bull market for crypto. In light of Ukraine, I'm actually even more bullish on the likely outcome of this executive order and the subsequent regulations that will follow for it, with one little exception, one little risk in the back of my head. So why am I more bullish? As I mentioned, Ukraine has sort of demonstrated that the world is going to embrace, want, desire a neutral financial infrastructure, a neutral payment system. I think that's probably something that's been released into the wild in a significant way and is not coming back in. There are two ways to look at that. One way is that it's very scary. If we're using sanctions to enact foreign policy in ways that we all support, the robust existence of a neutral financial infrastructure would provide a sort of release valve for bad actors in the world to continue transacting in a way around sanctions. So that's the negative story. But what we're seeing in Bitcoin rallying and what we're hearing from the regulatory side is there's another way to look at it, which is if this neutral financial infrastructure is going to exist, let's make sure it exists on our shores. The only way we can have sort of regulatory oversight, political oversight over this new important infrastructure element in the global financial system is if we onshore it. If we force it offshore and force it to exist outside of our borders, then the regimes that we don't want will be able to use it without us touching it, without us having any say, oversight, surveillance, etc. So what I expect is, although it's going to be contentious, and although you're going to see people say, we need to clamp down on crypto because we need sort of robust regulatory oversight, I think you're going to see an emerging political consensus that crypto is inevitable and that we want it to take place on our shores within our regulatory permit because the other option is too risky. So what I expect out of the executive order is a directive to different agencies to figure out how to regulate crypto. What I expect those agencies to do is to take, I would say, almost a progressive stance that says we need crypto to exist in the US. We need the US to be a leader in this market. And we want it both because it will be a source of economic growth and also because we want that regulatory oversight of something that is inevitable. And that, if we get that, the sky's really the limit in terms of what we will see from crypto over the next few years.
For sure. And do you feel that we are still in a bull market cycle? I know this can be a difficult question because no one can predict the future. Obviously, Bitcoin's value is on the rise right now. Some have said we've hit our peak. Some are saying there's lengthening cycles. Any insights that you can give us there?
Yeah, I think the second half of the year is going to be enormously exciting for Bitcoin and crypto. I thought we were going to sort of grind through a longer period. Ukraine may have changed that calculus, but I think whatever crypto winter we're going through is almost inevitably going to end. The secular trends behind crypto are just too strong right now. The movement of institutional capital and institutional investors into the space is relentless. The volume of calls and meetings we're doing at Bitwise and every other crypto asset manager is doing with the largest institutions and financial advisors in the world is unlike anything that I've experienced over the last 4 years at Bitwise. It really is a step function larger. The venture capital that has come into the space that we're now seeing the results of that investment of money is going to create a second wave of crypto. And as I mentioned, the sort of regulatory progress that I'm anticipating over the next 6 months, I think we're nearing the end of a difficult period in crypto. I think it could be a few more months before we really sort of unleash what's next, before we get to closer to regulatory clarity. But by this summer, I certainly think we'll be in another bull cycle for crypto. Could be wrong, of course. It's not investment advice, but the trends that I'm seeing underneath the surface are just so relentlessly positive. It's hard to imagine we don't exit this period of volatility and move on to a new exciting phase.
For sure. Now, Bitwise has a Bitcoin ETF or ETP application submitted to the SEC, and I believe they had asked for a longer review time. What updates can you give us on that, and what are you hearing from the SEC as far as potential Bitcoin spot ETF approval as well?
Yeah, I think this is a conversation that's really going to heat up this summer. Obviously, I can't speak exactly to Bitwise's filings beyond what's on the public record. And I don't have any inside information on whether the SEC is going to approve or not approve an ETF. But what I can say is that the quality of applications that are lined up at the SEC for them to do their final review of are stronger over the next 6 months than they have been at any time in the past, right? We've been shooting on goal for a Bitcoin ETF since 2013. So there have been a lot of applications, but the quality of applications from ARK, from Grayscale, from Bitwise, which are among the next 3 that the SEC has to pronounce on, they're just better applications. They have more data behind them. The SEC is asking better questions. So I'm optimistic that we'll see a Bitcoin ETF this year. Grayscale has enacted this huge public relations campaign. Bitwise is supplying hundreds of pages of research in support of those applications. Other people are working on sort of the infrastructure behind the scenes. And also, let's be honest, it's time. We have a Bitcoin futures ETF. There are Bitcoin ETFs around the world. People are already buying Bitcoin in any different ways. It's time. I think the pressure will eventually be too much. And I think the SEC will look at the data, and I'm hopeful we'll make the right decision.
For sure. Yeah, it kind of saddens me to see, a Bitcoin ETF, a spot ETF getting approved in Canada. And, if Fidelity's, and they're getting it listed on the Toronto Stock Exchange, and it's like, hey, why isn't this happening in the United States? Now, obviously, I'm happy for the folks in Canada, but, it's just, where is it? I think it's like you said, it's overdue, and hopefully the SEC can get that going this year.
And it's really important. The thing about an ETF is it will not only unlock new parts of the market by helping financial advisors gain exposure, which is great, but it'll make crypto investing cheaper, more secure, and more familiar for many investors. Crypto investing is still really too expensive for most people. Retail investors pay a very high fee to access the crypto markets. One thing about ETFs, I come from an ETF background. I was the CEO of ETF.com for 12 years. ETFs dramatically drive down the cost of investing. So we could save retail investors billions of dollars per year by allowing there to be a Bitcoin ETF to exist. Now, it has to fit within the regulatory framework. The SEC has been right to ask questions about it, but there is a big investor protection and investor cost-saving element to allowing an ETF to exist. You're going to see that in Canada. We've seen that in Switzerland. We've seen that in the Nordics. We've seen that in Brazil. All places where crypto ETPs are trading and helping investors access the market. And I'm hopeful we'll get it in the US as well.
For sure. And do you anticipate, and it's probably goes without saying, that once a Bitcoin spot ETF has been approved, altcoin ETFs will be approved as well? Ethereum, Polkadot, Luna, whatever it may be, those would come after.
Yeah, it's a great question. I think there's a pathway today for an Ethereum ETF. Beyond that, it's more difficult from a regulatory perspective. I'll go a little bit wonky for you. The way that the SEC approves commodity ETPs is that they rely, at least in major part, on the existence of a regulated futures market to provide some surveillance on that market. So to get out of the crypto world, the SEC approved a gold ETF in 2003 or 2004. The gold market's not regulated, right? If you go on 47th Street in New York, there aren't regulators looking over the shoulders of the gold dealers. But there's a gold futures market called the COMEX Gold Futures Market that is regulated. And so the SEC relied on the existence of that market to permit a gold ETF to launch. Today, the arguments that the SEC should allow a Bitcoin ETF to launch, a spot Bitcoin ETF, rely in part on the existence of that regulated CME market that you can surveil. I said there's a pathway for an Ethereum ETF because, of course, there are regulated futures on Ethereum. In order to get beyond Bitcoin and Ethereum, one of two things have to happen. Either we need futures on more altcoins on regulated markets. I think we'll see that eventually, but we don't have it today. Or we need some sort of regulation of crypto trading venues like Coinbase. And I actually think that's what will happen. And once we get a self-regulatory organization for those crypto trading venues and some core regulatory infrastructure, you can see ETPs on a wide variety of crypto assets, on indexes of crypto assets. And that's, I think, the eventual state. But it's going to be sort of like a waterfall. Bitcoin, Ethereum, and then I think a Cambrian explosion at some point down the line. But it could be a significant amount of time between those milestones.
Exciting times ahead. Some uncertainty as well. And hopefully the SEC can get it right. The United States can get it right. And we are on a clearer path. Matt, I have a final question here for you. It's more of a personal one. And it is, if you could create your own metaverse, what would the theme be about?
Oh, if I could create my own metaverse, what would the theme be about? It'd be somewhere at the infrastructure. I know the answer. It'd be a non-zero sum metaverse where we all work together to make something bigger than our individual parts. You see that happen every day in business. We're seeing it happen in crypto. It's my favorite thing in the world, where people realize that pursuing something they're interested in can help other people pursue things they're interested in as well. So I think about non-zero sum game design, and that would be my version of a utopian metaverse.
Awesome. Matt, always a pleasure chatting with you. Thank you so much for joining me today.
Thanks for having me. Great questions.